All right, we are live, Mr. Nigel Walsh, the Managing Director at Google, Managing Director of Insurance at Google Cloud. I
Fantastic.
got that.
Nice. Yep.
Yeah, I think I got that right. Yeah, I'm excited to have you on. We had a fun little pre-show. Do you want to just walk me through? You've been at Google for not very long, only a few months, I think. Is that right?
That's right. Yeah. Although it does feel like dog years sometimes. It's an amazing organization, as you might expect. The funny story here is, I'll make you laugh. My wife said to me when I joined, she goes, "Finally, you've joined an organization that I've heard of." So it did make me chuckle. I've been here for just under 4 months now. Prior to that, I spent 5 years as a partner at Deloitte, where I ran global future of insurance. I co-led on global InsurTech. I did a bunch of other cool things. And then prior to that was in Capgemini on the services side, helping organizations do large-scale technical transformation with things like Guidewire and Salesforce and all those sorts of good things. So I am 100% insurance geek. And over the last couple of years, even more than 100% on InsurTech, which is absolutely my passion and an area of focus as well.
Well, yeah. So tell me a little about that. What gets you excited about insurance? What is it about the non-obvious part of it?
Well,
So
look,
I guess
let me ask you this. Do you love your insurance provider?
when I think of insurance, I don't even know where my brain should go. I think, okay, what do I have insured? My car. I have a renter's insurance. I use USAA. Like to me, it's kind of I know it's a big deal, like it's a big industry, but in my actual life, it's not until I need it. Obviously, when you need it, then it's a big deal. Health insurance, another big one. Company insurance. Yeah, I guess the more I think about it, there are things. Would I say I love them? I don't know. They're not. Insurance to me is not a how would you say it? It's like it's not a part of my life on a day to day, week to week.
Whoa. So, and do you love your bank?
I use Novo Bank, and I'm pretty fond of them. I like them a lot, and I
All
use
right.
USAA. I like them pretty
All
decent.
right. So here's my mission is very much how do we make insurance lovable? And I genuinely want people to understand the benefit, the need, the why of why we have insurance. I've always argued that, you go to school and you will learn about loads of cool things, whether it's maths or geography or history, or whatever else, but you won't learn about bank accounts. You won't learn about what insurance is for. You won't learn about why you need it, how it works, and how it protects people. And I think we have a big issue on education around insurance and what it's there for. Going a stage further to your point about banking, you engage with them on a more frequent basis. Insurance seems to be more of a fire and forget purchase. You buy it maybe on an annual contract, and once you've got it, you then go, I'll ignore it for the year, hoping that you never have to claim. So there's a whole thing here about how do we change the engagement and the mindset and the perception to make people fall in love with insurance all over again and understand why it's there. And I think there's a load of new things going on around business model change where you go for, rather than annual policies, you end up with a monthly subscription or a utility basis. So, for example, you may own your own vehicle today, but what if you never own a car again? What if you subscribe to the car and the insurance is embedded and invisible to the actual transaction? And all you're doing is you're paying per mile. And there's some great organizations out there globally, like Cover or Metro Mile or a whole host of others that will give you cover on a mileage basis as opposed to, hey, I bought an annual policy. I don't care how far I drive.
Yeah,
Same for
yeah.
renters. Same for business insurance. How do I have it when I need it and not when I don't need it?
Isn't that kind of the whole challenge of insurance? Is that it's a data collection issue. It's Metro Mile is exciting because they have access to a new data set that my USAA doesn't have access to, so they can be more intelligent about how the insurance is priced per user. So yeah, do you see it as like a data collection race where the sensors and the apps and everything are like the more data we get, the more sophisticated and precise we can get with the type of insurance models we offer?
Exactly that. Each and every one of us is different, right? Every one of us has different perceptions, different requirements, different expectations of what we want to do and how we want to cover stuff. Some things are mandated, of course, right? So things like motor insurance is, of course, mandated for us to be able to drive a vehicle. Now you can get different levels of cover, you can get different deductibles or whatever else that goes in with that allow you to tweak and tune it. The best example here, though, never mind the physical assets that are in many cases lumps of metal or property. One of my favorite ones I'm personally very interested in as well is health insurance. How do I have, whether it's my Fitbit, my Apple Watch, my Whoop, or whatever else it is, give me insights to lead a longer, healthier life? And if I said to you, hey, we can help you lead a longer, healthier life if you did these 3 or 4 steps, and we use the data we have about your sleep patterns, about your exercise, about your rest, to give you the insights to be healthier, to live longer, and then you can make the choice whether you wanted to do those things or not. Would you do it? And I think the data that we've seen so far says, hey, if you can tell us that Mike drives safely, if we give him insights about how to corner, how to brake, where to avoid. I mean, the latest maps release that we showed accident hotspots. If I told you that to your sat nav in your car and said, don't drive down there at 7 a.m. because it's a hotspot, there's a good chance you'd avoid it. And as a net result, you avoid an accident. So we're saving lives.
Yeah. Well, first question I have for you: when was the heyday of insurance? You said earlier insurance is making a comeback. Was there a time when insurance was somehow better than it currently is, or back, I guess, in the 40s, 50s, when major industries like banking and transportation were coming online? Was insurance handled structurally different than it is today, or is it kind of a gradual evolution?
I talk a lot about evolution and revolution. I think insurance has been one of those industries that's been evolving for years. Like banking, we manufacture absolutely nothing. We manufacture data. And because we are annualized as opposed to transactional, where you might check your bank balance on a daily or weekly or monthly basis, honestly, if you didn't make a claim or move address or get married or change your name or whatever, the chances of you calling your insurance agent or broker or carrier direct, in fact, let me ask you, when was the last time you spoke to them?
Pretty infrequently. I don't really talk to them.
When was the last time you checked your bank account?
This morning.
Right, there we go. Now we're starting to get into one of the challenges. Yeah, you look at some of the really cool people. I'm a big fan of Haggerty. They do classic car insurance. Now, there's a difference between insuring your homeowners or renters, your standard, Ford F-150, or your classic 356 Porsche. Because if you've got a classic car on the driveway or in the garage or wherever else, you're likely to be more engaged and more passionate about that thing because we really love it, as opposed to insuring your refrigerator, right? So actually, if you look at things like Haggerty, my understanding from these guys a while back is they engage their clients like 82 times a year. 82, wow. Right? So they are turning it from a transactional, hey, call us when you need us, into a let's build a relationship. Now, 52 of those might be newsletters on a weekly basis. But they did 2,000 events pre-COVID to get you excited about, you want to strip your Henny engine or whatever it might be. Here's a video. Here's a YouTube thing. Here, let's go out buy a magazine and we'll give you all the insights you need to do. You want to connect with other fellow car enthusiasts? Guess what? We're going to get you connected to those people. So you can get people to fall in love with things they're truly passionate about. So I think we've got to work out ways and means we can choose how we engage. And if my watch is popping up and saying, hey, Nigel, you need more sleep, or you can do X, Y, and Z, or your blood sugar level and your continuous glucose monitoring might need addressing. If I get those nudges and prompts, I might change my lifestyle. That makes me healthier and live longer. And I think these are all the opportunities to turn the product into from a reactive product, let's be there after the event, into a risk management product, which says, how do I get there before the event? Imagine a world where there's no claims. Imagine a world where it said, hey, Mike, don't drive down there because it's an accident black spot, and I've avoided you ever needing to call me about a claim.
Yeah. Okay. I'm with you. So there's
now you're smiling though. Now people can't see you in the podcast, but now you're smiling. Now you're going, I get this. I imagine a world where I never have an accident again because we're using AI or machine learning or cars are talking to each other, and we've got to a state where connected vehicles are making sure that there's no more accidents in the world.
Yeah. Yeah, it seems a little easier to wrap my mind around it when it's cars, because it does feel like Tesla and other cars will have the sensors that they probably can wrap their own insurance around the product. So they sell you a Tesla and they're like, hey, we also have the best insurance and it's the cheapest because we have the safest cars that do all this fancy stuff. I think that the healthcare is where I have a lot of unprocessed opinions on this, because there's both ethical, like I guess you call it moral, judgmental ideas about what type of data is okay and what isn't okay to collect about people, and then there's also the financial incentive that in the healthcare industry, like every industry, they want more products and services to be sold. So healthcare organizations like a hospital would want people, technically, financially, they're incentivized for people to come in and become served. So and I also find it interesting. I think this is true for the most part. Tell me if it's not. But the way that healthcare insurance companies make money is they take a percentage of the premium that they charge employers. So if an employer is paying, you know, I don't know, a per patient per month of like $150, then the health insurance company is taking a percentage of that. So they're financially incentivized for the prices to go up as well. And I mean, I'm curious what your take on what changes should need to happen in healthcare to make things make sense.
I think your point's very valid, and actually, my personal perspective on this is, if you keep going through evolutions, we'll only ever get, a faster horse. But what's the revolution in the industry that says we got to flip the model at some point? There's a startup in the UK called Laka, which does cycle insurance, that's got a stop loss. Now, a stop loss is an insurance mechanism that says it will never go above this market rate. But if you don't claim, you don't pay that full amount. So it's rebalancing the relationship between customer and provider. So your amount you pay each month might be variable, but it will never go above market rate, so you feel like you're getting a good deal. But if everyone in that pool stays healthy, doesn't make a claim, or whatever else it might be, you actually get better off. And the same is true for healthcare. So you look at people like Vitality in the UK, Discovery in South Africa, and many others, they reward you for good behavior, as in being active. So if you do X number of minutes a day exercise or a week, or activity, which could be walking or whatever it might be, there's scientific evidence that will turn around and say, hey, being mobile, being healthy does all these things. And rather than reward you with a discount, we'll reward you with a coffee or a watch or a device for the home, whatever it might be. So I think we have the opportunity, and the industry globally has the opportunity to change the narrative with the client, where we don't focus on purely just price, but we focus on managing risk, reducing risk for individuals, for businesses, for drivers, and so much more, to make our lives better, safer, and healthier. I'll give you a really good example on homeowners, and it's a funny one. My wife went out with my daughter one day. I was cooking for my son. I say the word cooking loosely. My Nest device went off in the house. I get an alert on my phone saying, hey, there's smoke in the kitchen. My wife's at the class with my daughter, gets an alert on her phone, get there's smoke in the kitchen. I then get a message from my wife, a text message going, hey, are you at home? Are you cooking? Followed by a message from the Nest device going, smoke is clearing. I guess so, from Emma afterwards. So all those insights, I think, are really, really cool and give you a level of reassurance. I go back years ago where I used to put a square battery into a smoke alarm and forget it, and it would beep after about 3 years. Nowadays, I get a monthly update for my smoke alarm, and I get reassured because it tells me there's been X number of days since a smoke alert or X number of days since a test. So the preventative nature of that gives me peace of mind to know that my property is safe and I'm now nudged to go do something. So back to our really earlier point, rather than just saying, hey, here's a policy and forget about it, I'm now engaging on a monthly basis with a smoke alarm. I thought that would never be possible. It's truly changing behaviors and our attitude towards risk in my mind.
Yeah, that's super interesting. I think it reminds me in a way. Do you ever see the movie was it Meet the Parents, or was it Ben Stiller movie? Maybe it was Along Came Polly. Have you ever seen this movie? The guy is
It's hilarious. He's the insurance guy, right? And it's, so,
yeah,
it's Jennifer Aniston, it's Ben Stiller, it's really funny. He's the insurance agent. You got
yeah,
the Australian guy jumping off a building going, "What do you mean there's no risk?" And it's just
yeah.
really, really good. And I think he does, not that this is ever should be endorsed, doesn't he put Jennifer Aniston's details into his risk model on the computer and she finds it?
Yeah, yeah, that's priceless. That's so funny.
Don't do that, people. That's a bad idea.
Yeah, yeah, yeah. How do you think about like on healthcare? One of the things that I think is a really bad idea is that in the United States, a huge percentage of the healthcare insurance market is covered by mandate from employers, and so you effectively have this system where people don't have the power of the money that they're spending, and 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 because of that, because the employers are effectively making pseudo decisions on how people should be buying their healthcare, there's really no one to hold the system accountable. People don't have any control. They don't have any influence over the money that they're spending. And because it's generally money that's withheld from salaries, people don't recognize or see how much they're paying. So like 16% will just come out of your paycheck and you don't even see that. So my thought is that we need to, as quickly as possible, remove employers from the whole system of healthcare. And it seems like it would be supported on both sides politically. I don't know why that is not more commonly discussed. It seems like it would be possibly the biggest thing for our economy to recalibrate the way that the incentive structure is set up for health insurance. I don't know if you have any thoughts on that, but I find that like disturbingly massive.
Yeah, I mean, it's not my area of expertise, so I really won't comment.
Mm,
I will say I think all the insights and data we get that more and more people are picking up. I mean, I look at my kids. My kids are 12 and 8, and they're running around with little Fitbit devices going, "Hey, Dad, I've done 10,000 steps more than you. You need to start moving. Stop sitting on Zoom or Meet calls all day." I'm like, I know. Um,
mm.
but I think we're getting more insights that will allow us to take control in different ways going forward. And it's just a matter of time before we reach a tipping point that says, I've now got the capability to make different decisions. How that works commercially going forward is not my area of expertise, so I certainly won't comment.
Yeah. So how do you define your areas of expertise?
So for me, a lot of it is around innovation in insurance. One of the things let me give you a couple of examples. So back in my Deloitte days, I was doing a lot of work with folks that were non-insurers, and what I mean by that is, imagine you buy your vehicle and you don't even think about insurance. It was embedded into the transaction. So a lot of folks talk about embedded finance. I go a stage further about embedded insurance. So I've got this whole, and I love baking, really unhealthy, unfortunately, but there we go. I love baking and the results of what you get with it. I've got this whole analogy called, we have all the ingredients, but we just want cake. You don't walk into a coffee shop and say, "Hey, can I have blueberries, flour, eggs, a muffin case?" You walk in and say, "Hey, can I have a blueberry muffin?" I feel insurers, I feel like auto providers, maybe even homeowners say, "Hey, you got to go and buy tax, insurance, tires, servicing, the whole lot." What if you went in and just bought the vehicle and it came with the lease, windscreen cover, glass cover, insurance, and everything that you needed wrapped up into a single transaction, so that you get to enjoy the thing that you want, which isn't actually the car, it's the ability to go from A to B.
Hmm.
It spans every industry. There are apartment blocks in New York today that you can go buy an apartment or rent an apartment that come with access to a vehicle parked in the lot. Because parking in big cities is both troublesome and expensive. Do you use your car all the time? Well, from research that I've seen, anything between 90 and 95% of your time that you own the vehicle, it's sat idle in a car park somewhere, or overnight on your driveway or the street or whatever else. So what if you had a shared vehicle that you could use? Where's your car today? Is it sitting on the road? And if you weren't using it, could someone else use it? So this whole changing the economy and how we actually use and understand assets, I think, has a massive opportunity. So for me, I was helping design models around, how do we create insurance that's embedded into the thing that we want in the first place, how we help retailers build insurance products, how we help banks launch products, and so much more. So a lot of it goes back to who owns the customer of the future, how we engage and what we do. And that meant helping big insurers transform their technology estate, enable it with APIs or other things to almost make insurance headless. And what I mean by that is, can we take off the agent, the distribution, the portal at the front end, and plug us straight into the I'm buying a car, let's just get insurance embedded into that transaction.
Yeah, I like that. I mean, it is a lot simpler. I guess the only pushback I would think would be if I buy a car and you have insurance baked into it. Insurance is a significant expense for cars, as when you think about the price of it. So would that necessarily be the best price insurance or the best insurance that comes wrapped in whoever's selling me the car? Or is there some advantage that they would have that would make it the best, like a structural advantage, how Metromile kind of has? One thing I not to sidetrack on Metromile, but I used Metromile for a while, and it actually was more expensive than USAA. And I don't know if that's just bad pricing by USAA or what the situation was, but I thought for sure it would be less. And I think maybe I was in the situation where I really wasn't driving much. So I was kind of like the equivalent of a fat person for healthcare, where I would be, I'm not, I'm kind of a higher premium person or higher risk person if I'm paying more.
But interestingly now, so you've jumped straight to price being the metric. What if one provider gave you a 5-star service in the event of a claim, and another provider gave you a 1-star service? Our natural reaction, your point about healthcare is valid as well. What if our natural reaction is we focus on price because that's the bit that we worry about from an affordability, not the fact that 1 in 10 people actually make a claim? So we've defaulted our behavior to going, hey, the cheapest thing's got to be the right answer. What if actually the more expensive one, and we assessed it on value rather than price? And I think that's one of the things we have to start addressing or looking at. Do I get a like for like car in a crash? Do I get a someone I can speak to 24/7? Do I get a body shop or a repair shop or a replacement car within 24 hours or 7 hours, whatever it might be? And I think the markets globally are really interesting. In the UK, as an example, the market here is price comparison websites. You jump on, put in 58 bits of information, and you get 90 quotes back in 60 seconds. But it's a price comparison website. It's not a value comparison website. And I think we need to start readjusting our lens sometimes to go, you know what? Maybe price is the wrong proxy to measure some of these things on.
Yeah. Well, it seems like if the words to describe the coverage are equal, if someone breaks off your side view mirror on your car, and we're going to cover that, for example, if 2 insurance providers are offering that same exact coverage, then price is the point. And I think to your point, you're saying that the thing that the insurance companies are covering has to be equal in order to compare price equally. But it's often just difficult to assess, right?
All right. So of your 2 providers, did you read both the policy wording?
No, not really. I mean, they're just kind of 5 points. It's like if someone hits you, what happens? If you hit someone else, what happens? If you get in an accident while you're driving and someone goes to the hospital, how much you have to pay? And yeah, it was kind of like, okay, choose each one of these. And I don't know how to choose. I mean, basically, it's like how much money are you? Really, the question is like, how much money do you have to lose? If you have a lot to lose, then you'd want more insurance. That was my takeaway from it.
But it depends on the type of thing. But you've just highlighted the education point I made earlier about we need to start educating people about insurance and what it does and what it doesn't do and what levels of coverage that we need at a much earlier age, I think. And I think we'd all be better off if we understood risk in different ways. To your point about the different options of to which to choose, again, that's where the benefit of having a solid insurance agent or broker to talk you through your appetite to risk, whatever else, I think is also really important. Because my mum's attitude, my mum's 70, she won't listen to this and she'll give out to me if I tell people her age, but my mum's 77, She has never lost her keys in her entire life. So why does she pay $30 a year to have key protection? Just in case I lose my keys. So people's attitude to risk is very different. The other thing I've noticed more and more is people's attitude to self-insure stuff has gone up. So actually, you might go for third-party liability, as in other person, because you're mandated to do that. But stuff of your own stuff, you might go, you know what, man, if I lose my phone, I'm just going to buy another one. I can afford to cover that myself, therefore I don't need to worry about it. Or I'll afford to cover whatever it may be. So a lot of this is down to your attitude and aptitude to risk. And I think that that depends on financial stability, position in life in terms of or stage of life. You know, my attitude to life changed dramatically once kids came along. Before kids, I may have had a mortgage but didn't have a will. As soon as kids came along, you think to yourself, oh, well, what happens if I die? And do you know, you think about this sort of stuff, then you go, huh, I want to make sure that the kids are looked after and I know what's going to happen to them. So I think life stage and life events really important and links back to insurance and broader financial planning as well. So
Yeah. Yeah, no, I'm with you. I'm more or less vibing on everything you're saying here, where it feels a lot emotional too. There's some degree of respect I give to like a person I know who's just very safe, risk averse. They're just going to buy an irrationally high amount of insurance, and they're going to go to bed at night feeling good about that because they just can't imagine. They just want to feel that safe, that everything is protected and everything is insured. Whereas some people I know, personality wise, they're just like throw caution to the wind. They really should have insurance or more insurance they do on things, but it's a different personality type.
it's a balance. And I think this is why it's really interesting because you can insure pretty much absolutely anything. Whether it's a specialist market or high net worth or simple individual risk. And you need to choose what your deductible is. And the higher you make it, the lower the premium. But you need to understand what you're comfortable with. And
Yeah.
Like you, I've got a whole bunch of friends and colleagues that have very different attitudes to risk. And as a net result, they have different levels of insurance that meets their lifestyle and their affordability at different points in time.
Yeah. One thing I want to ask you is how big of a problem in the market is fraud, insurance fraud? I remember I think I broke my own car. What did I do? I think I hit the side of my door with my car, and it was totally my fault. But I remember thinking like, all right, this is going to cost me $1,500 to fix. Of course, the thought goes through my head: how would the insurance company ever know if And I was curious. So I ended up on some Reddit boards where they were talking about, oh yeah, we look at cameras and we do this, but there's not an all-knowing eye in the sky. How do you have any idea how much of a financial burden it is?
It is gargantuan beyond all recognition. And actually, to be fair, not just fraud, but underinsured or uninsured is a huge issue. So again, if you crashed into a driver with no insurance, what do? Who pays for that? There's industry initiatives out there that come together to make sure that you cover uninsured loss in one respect. If you listen to Daniel Schreiber, CEO and founder of Lemonade, he talks about people are more comfortable lying to insurers on many occasions because, hey, it's just a white lie. What that's okay, isn't it? And if you just jump onto YouTube, you will see. This is if you've got a coffee break and you want to see the extent of this. You'll see people jumping in front of cars on purpose to make a claim against drivers. Damn. This is why we've got things like dash cams, and there's some really great clips on there that when you get out of the car and go, you do realize you're on a dash cam. You watch these people get up and run off going, oh my God, I've been caught. So whilst you say there's no all-seeing eye, there is more and more insights available, and it varies country to country. Some of these things are banned in places like Germany, they don't let you have cameras. But in the UK now, we ask you when you fill out your insurance, hey, do you have a dash cam? Because that helps reduce fraud and mitigate the risk to go, it is evident and it is clear that Nigel ran into Mike or Mike ran into Nigel. So
Yeah.
understanding who's at fault is really important. The same is true for connected car data. You know, if so there's a lot of telematics providers out there. It's like usage-based insurance, taking data and sensors out of vehicles. Imagine if I clipped a curb and I didn't report it because I just clipped the curb. It's fine. And then 3 weeks later, I have an accident. And it was as a net result of clipping the curb 3 weeks ago, not getting an address because my tracking was out on the vehicle. What should I have done? Going back to the data and our conversation earlier, what if we got to the point where I said, hey, Mike, you clipped the curb. No one's at fault. There's no issues. We think we want to get your car sorted out because we think your tracking's out.
Mm-hmm.
And it will prevent you having an accident or maybe having an accident later. Would you not feel more comfortable that your car had told you, hey, something's wrong?
Yeah.
In
Yes, it makes
the
sense.
same way that you get in a modern car and no one switches on lights, no one switches on windscreen wipers because it's done for us automatically,
Yeah.
right? No one. You go and drive an old car with no power steering, and you're like yanking the wheel around because it's really hard work. I think
Yeah.
all these new technologies, back to your point about evolution earlier, it's just evolutionary.
Yeah.
In everything that we do, whether it's home, healthcare, auto, we are not going to have less technology and less insight tomorrow than we did yesterday.
Yeah.
Justin Trudeau said years ago, and I love the quote. He said something along the lines of, "We have never moved this fast, but we're never ever going to move this slow again." And I love it
Mm.
because it's just going to get faster and faster. My kids freak me out with the things that they do and know and see and how they learn. You know, I'd be into a book. They're into YouTube. Everything's like learned on YouTube. If I'm stuck, I try to fix a pipe or paint the garage floor or whatever it might be. You know where I go? I'm instantly on YouTube learning. It's an amazing
Yeah.
source. So it's lots of these things have evolved.
Yeah. 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 You're right. I mean, it's a really good point. How does your role at Google? So at Google, you're on the Google Cloud team. What is are you thinking about strictly within the boundaries of Google Cloud, the hosting provider for
Yeah,
people
very much.
that?
And look, my role is North America focused. It's Google Cloud, and we're here to help people leverage the technology and insights and capability that we have as an organization to do all the things that you'd expect from a leading cloud provider out there. So when you look at what we know around AI and ML and how we can accelerate things around that, we have some amazing people and teams that can get the whole insurance process more efficient, more effective, more engaging, um, from all the way through from an ingestion. So, you know, if you look at things like Doc AI in our estate, Doc AI takes huge swaths of paper-based forms, ingests them, allows you to slam that against the policy administration system and get a quote out really quickly. So we can automate lots of the traditional or monotonous tasks and make it much smarter and more effective for both end customers, agents, and insurers themselves. And there's not a single facet of the insurance value chain, whether it's underwriting, insights, claims, understanding risks, that we cannot apply our technology to and come out with a better answer in my mind.
Hmm. So your day to day is thinking about how to use the technology at Google to offer these like AI and ML insights to other companies, or you're more or less thinking is Google itself providing insurance for its products? Is that no, not this.
No, no,
Okay.
no, no. And actually, you know, the first question I get asked by most people is, "Hey, is Google going into insurance?" My focus is very much on the how does cloud enable insurance carriers. And again, we've got some great
Hmm.
examples that are public, whether it's our partnership with Munich Re and Allianz Global Corporate on cyber, whether it's what we created in the London market with Brit and Key. They're all partnerships. And I think it's a case of how do we partner to enable and drive the industry forward. And I think that's, you know, insurance is very much partner driven as opposed to anything else. I think it's a great opportunity to really drive the industry forward.
Yeah,
No
I'm
pun
trying
intended on driving.
I'm trying to wrap my mind around it, around what your how do you judge what is how do you judge if you have a good or bad quarter or a good or bad year? Like, how do you know if you're doing a good job?
Look, I said to you at the outset, my ambition is how do I make insurance more lovable? If you take my role and apply it to that ambition, that could be how do I create better engagement with Mike throughout the year? That's not
Mm,
once a year to go, hey, give me a lower price. What if I called you? What if I engaged through dialogue flow or chat bots or proactively and said, hey, Mike, did you know X, Y, and Z? And started to create a two-way conversation. Now, not many people want that with their insurance company. And I think our role is about creating those moments that will allow you to engage in a completely different and better way going forward. But as I said, there's
mm.
no single facet of the insurance value chain, whether it's, hey, Mike, we got better insights about your behaviors and what you're doing to give you a better service and better price.
Interesting. Did Google create this role for you, or did you apply or get introduced through somebody?
I got introduced to Yolanda, who leads financial services for cloud in North America. It's an amazing opportunity. The cloud business is such a strong business across every vertical. Financial services, there's some great clients that are again that are public. I saw lots of big banks and financial institutions get way ahead, and I didn't see enough insurance companies. So when fate turned into, hey, there's an opportunity, I jumped at it.
That's cool. I feel like you should be running a conference. You've written a couple books. You're a big fan of emojis, which I like. Uh, do you have ambitions to get people together in big communities, or what do you
It's,
think
it,
about?
it's funny. Look, insurance for me is a community in general, right? And I love the fact people come together. I'm a big fan of things like InsurTech Connect, run by Jay and
Mm.
Caribou. It used to get together annually in Vegas. You know, it was like 1,000 people originally. It turned out to be 8,000 people in Vegas. Can you imagine 8,000 insurance people in Vegas at one point? Anyway, it happens to be on my wife's birthday. I keep saying to her, hey, come to Vegas. She's like, I don't want to spend my birthday with 8,000 insurance people. But that aside, you get traditional carriers, you get insurtechs, you get disruptors, you get new technologies all together. But the global insurance community are all together solving things, whether it's on LinkedIn or Twitter or elsewhere. It's a truly lovely community of people that are there trying to solve the challenge of, hey, I want the lowest possible price, so I'm not interested. You know, I think there's loads of cool things. If you look at the insurtech community, there's been the best part of what, $35 billion invested over the last couple of years. There's 4,500 startups out there. You've mentioned a few. I've mentioned a few across every facet. In fact, the Amber, who introduced us, is a good buddy of mine from Hyper Exponential.
Mm.
We had him on the podcast recently. What they're doing is taking data and applying it to risks and pricing and just changing the way we've done things, or the way things have always been done, into a much faster, more effective and efficient way of doing things. So there's great opportunity out there to truly change this industry going forward. Is it going to look different in 100 years than it does today? Without a doubt.
Yeah, I would hope so. If it didn't, we'd be in some kind of dystopia.
I'm going to come back and ask you, do you love it? I'm not going to say 100 years. I doubt you and I will be around then, but maybe in 5 years I come back to you and say, do you now love your insurance company? And if I hear you say yes, I'm going to go for the win.
Yeah. I mean, I love them. I feel like what would make me not love them um, is I feel like they would be deceptive with what they cover. Um, I think when you go from I'm neutral to I like them, is are they doing things to help me live a better life, uh, save money on insurance by doing something different than I currently am? And I think conceptually it's like, yeah, you want, I almost, I mean, obviously I think it's a good phrase, you want people to love their insurance providers, but also shifting it from a concept of this is my company that does insurance for me, as opposed to this is a company who helps me, you know, uh, drive safer. They help me understand my body better, so I become more motivated to lose weight. And like weight is the major thing that attributes to the vast majority of health issues, at
Well,
least
it
in
could
this
be
country
loads of
where
other
there's so
things.
many obese people.
Things like continuous glucose monitoring. I'm intrigued by all this stuff. I've got a blood test kit here I do on a quarterly basis to check out my blood sugar my bloods. The reason I did that was I got banned from giving blood because my iron levels dropped. So our ability to understand our own bodies and do our own health even at home, and even the pandemic, I think, has been, whilst it's been horrific globally, has been an accelerant to things like telemedicine and telehealth. Years ago or 5 years ago, we'd go, I'm going to sit in a doctor's surgery. Today, if I said to you, hey, I've got a doctor's appointment and we can have you on the phone with them in 30 minutes for a video call, we are there in a heartbeat.
Mm. Yeah.
So
Yeah.
we have accelerated the way we engage and interact. And I think our opportunity going forward is phenomenal. It really is. Think about it as our seatbelt for life. It's going to be there to protect us.
Yeah. I almost wonder if the healthcare insurance companies should be investing in, well, I don't know. I mean, should they be investing in better food production? Like I saw this interesting statistic a few months ago it was something like 6% in the year 100 years ago in 1918, the percentage of your salary that would go to food would be about 20%, and the percentage of your salary that went to healthcare is about 5%. And now that is flipped. So we're still paying the same for healthcare and food, but we're paying much more in healthcare expenses and much less in food, because the food, presumably, this is your interpretation of it, my interpretation, is that the food quality is now way lower. We have monocrops and we have just kind of nutritionless food production that's super cheap, but the repercussion of that is 30% of people are obese and we have all these chronic issues. And yeah, it's an interesting flip that kind of happened. It's like the pendulum swung one way and then swung back the other way.
Look, I think we have so much data and insight. We need to be able to educate at the outset to help people lead longer, healthier lives. It's the more I get into it, the more I get excited by that sort of thing. And longer, healthier lives means what we do, what we eat, how we exercise, how we don't exercise, and all that sort of stuff. It's a personal passion of mine more than anything else as well. For those poor people that follow me on Twitter, I apologize for all the workouts, but equally, I make no apology for all the cakes and baking. So it's balance, right? All these things come back to balance and moderation. And no doubt I'm a great example of one of those folks that's yo-yo up and down. And doing all these things at once is hard, right? It's tough sitting in front of Zoom calls or meets or whatever else all day and filling it in with family and everything else. So, hey, it's never easy, but I think we have the opportunity to understand these things better and make choices going forward.
Yeah. Yeah. Well, Nigel, it's been a pleasure. I know we have to wrap up. Your Twitter handle is your name, Nigel Walsh.
Absolutely. You can find me on Twitter at Nigel Walsh, or on LinkedIn, again, Nigel Walsh. And I'm forever join me on my podcast, InsurTech Insiders with the 11FS crew. I'm truly passionate about this area. I have a strong belief we are at the tip of the iceberg and there's so much more cool stuff to come.
Awesome, man. Well, really enjoyed talking to you, and congrats on all the progress. Hope we do
Thanks
some cool
so much.
stuff at Google. See you, buddy.